Hello traders, you're welcome once again to our YouTube channel. Today I want to share with you a very lovely strategy. This strategy is easy. Why I love this strategy is that it is easy. In fact, most people erroneously think, several traders erroneously think that complex strategies are the best strategies. No. In fact, in trading, I've come to understand in trading that complex strategies do not always mean the best strategy. And when we say best strategy, that is a profitable strategy. So complex strategies do not really mean that they are going to be profitable strategies. In fact, that is why I always love simple strategies that are not complex. I love simple strategies. I prefer simple strategies to complex strategies. I operate on the principle of keys. The principle of keys, this means keep it simple. Keep it simple, stupid. Okay, so that's the principle that I work with. I love keeping things so easy. If you have studied my videos for some time now, if you have been following my videos, you will understand that I love keeping things easy. I don't like complicating things when trading. All right, so and I've also come to understand in trading that risk management and emotional control which is the same as good trading psychology, are the most important factors in trading success. When you talk about strategy constitutes strategy do not constitute a very high quota when it comes to trading success. If you have a strategy that gives you like 50% win rate and a risk to reward ratio of 1:2, you can be a profitable trader if you have good risk management and emotional control. Either if you win half of your trades and you win 2 times the size of whatever you lose each time you lose, then you should be a profitable trader. Or you have a strategy. In fact, if you even have a strategy that gives you 40% or even 30% win rate, but you have a risk to reward ratio of about 1:3 or more, you should be a profitable trader as well. So that is to say that what matters most is your risk management and emotional control. So do not chase complex strategy. Do not chase complex strategy. I don't chase complex strategy. All right, I love keeping things easy. So today I want to show you this strategy that is lovely. And before I do that, can you please consider subscribing to this channel if you're yet to do so, and turn on the notification bell so that you can be alerted when I post new videos. And if you're my returning subscriber, I want to say thank you so much for stopping by, and I promise to continue to deliver, to give you the secrets and the tips you need to succeed in your forex trading career. Also, I have a free Telegram channel, and if you are yet to join that Telegram channel, you can do so. The link to that Telegram channel is in the description box of this video. In that Telegram channel, I post useful information as to how to on chart analysis that you can actually trade at your own discretion. All right, so let us go straight into the chart to show you this strategy. This strategy is an EMA based strategy. An EMA based strategy. This is EMA means exponential moving average. EMA based exponential moving average. So we are going to be using 2 EMAs, which we have the 50 EMA and the 200 EMA. All right, so we're going to be using these 2 strategies, these 2 EMAs, the 2 indicators, these 2 indicators, the 50 EMA and the 200 EMA. So for a buy scenario, because when you every strategy, you should trade what is called the rule-based. Rule-based. You should have what is called the rule-based system. Rule-based trading system. Okay, what is a rule-based trading system? A rule-based trading system should have your entry criteria, what you should see, conditions you should see before you enter into a trade, entry criteria, okay, take profit criteria, and your stop loss, which is your exit. All right, these two are exits. You exit in profit or you exit in loss. So these three things are important when you talk about a trading strategy. You need to know your entry. What are the criteria? What are the things you need to see before you get into a trade? Also, you need to have your take profit criteria. Where do you got to get in out of the trade in profit? And the third thing is your exit criteria, your stop loss. What should you see in order to leave the trade? All right. So for a buy scenario, what are the rules? Number one, for a buy scenario, this strategy for a buy scenario, we call it golden cross. What do we mean? Number one, we wait for the 50 EMA. Wait for the 50 EMA to cross the 200 EMA. All right, 50 EMA crosses the 200 EMA. Number two, we can ensure that the 200 EMA is below the 50 EMA, or the 50. Another way of saying that the 50 EMA should be above the 200 EMA. All right. So when this happens, it's called the golden cross in the forex industry. When the 50 EMA crosses the 200 EMA, while the 200 EMA is below, it is called the golden cross, and this is a bullish scenario. All right. So the third thing in the rule, the third criteria is the wait for price to break above the 50 EMA. When this has happened, number four, you should wait for a retest, or for price to return to the 50 EMA. So when this happens, the 50 you need to do, when this has happened, when price has returned to the 50 EMA after breaking the 50 EMA, you need to look for, enter the trade, enter a buy trade on a bullish engulfing candle. When you see a bullish engulfing candle after a retest of the 50 EMA, you should get into the trade. Now, what is going to be our stop loss? Stop loss, place stop loss just 10 to 15 pips. Place stop loss 10 to 15 pips below the 200 EMA. For your take profit, we actually use what is called the trailing stop loss. Trailing stop loss means you keep on moving your take profit to the upside. As price keeps going in your favor, you keep on moving your take profit up and locking profit. And when eventually your trailing stop loss is hit, then you're out of the trade in some profit, secure profit. So why are we doing that? We want to ensure that we maximize, because we don't know how long the trade might last, how long the market might decide to favor you. So you keep on moving your stop loss above and above and above price until you need to keep on trailing your stop loss until you are eventually taken out. So this is for a buy scenario. Now for a sell scenario, the sell scenario in the forex industry is called the death cross. The death cross. Why? When the 50 EMA crosses the 200 EMA, when the 200 EMA is above the 50 EMA, which is another way of saying that the 50 EMA is below the 200 EMA. So this is called the death cross. Okay, death cross is usually a bearish cross of the 200 and the 50 EMA, while the golden cross is a bullish cross of the 50 and the 200 moving exponential moving average, or simple moving average, as the case might be. So the third criteria is to wait for price to break. Wait for price to break below the 50 EMA. Wait for price to break below the 50 EMA. Number 4, you wait just an opposite of the buy scenario. So you wait for a retest, just similar retest of the 50 EMA. Wait for a retest of the 50 EMA, and now you enter the trade. You enter a sell trade. You enter a sell trade on a bearish engulfing candle. Okay, you enter a sell trade on a bearish engulfing candle. So where do you place your stop loss? Place your stop loss just similar to the buy scenario, but in this case you place your stop loss above. So place your stop loss 10 to 15 pips above the 200 EMA. And number 7, which is the take profit criteria, we also use the trailing stop loss. So we keep on maximizing as the market continues to sell down. We keep on pushing our stop loss down until eventually price takes out our stop loss. All right, our trailing stop loss, as the case might be. Okay, so now let us go straight into the chart and let me show you how this works. Let me show you how this works. Okay, now first thing is to install the EMAs. All right, let's install the EMAs. So I'm going to this function sign, F sign, where I'm going to get my indicator. So it's just for indicators. So you can see I will click on this point, which shows the indicator. All right, I'm going to click on that indicator button. I'm clicking on it. So we're going to scroll up to where we can see moving average. So you see moving average here. So we click on moving average. So for the period for the period, for the period, so you see it's 50. It's already 50 on my chart. If it's not 50 on your chart, you can make it 50. For the shift, 0. For the method, you can either be simple or exponential, but in this case, we are going for exponential. We're going to change it to exponential. For the apply, you apply to close, right? We're applying it to close, but let's change this to exponential. How do we do that? So we click on it, we choose exponential. So we are choosing exponential. You can actually use simple, but in this case, you're using exponential. So we click on here on this exponential. Okay, so we have chosen exponential moving average. So we also scroll up. So for the pixel, you can choose 1 pixel, there's 2 pixel, there's 3 pixel. This actually means the thickness of the line when it actually appears. So I'm going for 3 pixel. All right, I've already selected 3 pixel. You can see there is 1, 2, 3, 4 pixel. Okay, so you can see 1, 2, 3, 4 pixels. So but I'm going for 3. Now the color, for the color of the line of the indicator, I'm going for green to indicate a buy. I'm going for green. So when you have done all that, so we're gonna close. We're gonna close. So we say done. We click on done right here. We click on done. So done. Okay. So we have. Well, let's go to the chart and see. Let's go to the chart and see. So we see we now have the indicator. This is the 50. This is the 50 EMA line is now showing. The 50 EMA line is showing. So we need to have the 200 EMA line or indicator. Let us go the same way. Let us go. We go to function sign. We click on the plus sign right here, the plus sign right here. Okay, so when we click on it, we scroll down until we go to moving average, just as we did in the first case. So we click on moving average. So for here, you can see we're going to change this period to 200, from 50 to 200. We're going to change. That's the only thing we're going to be changing right here. Every other thing is okay. We're going to be changing this period to 50, and then we're going to change this color as well. This color to red. So let's change the color to red. Change the color to red to indicate a buy. A sell. Okay, so we scroll up and change the 200, the 50 to 200. Let's change this to 200. So we change this to 200. Okay, 200. So that is it. 200 done. Okay, so we are done. So our shift went to 200. Let's remove it. It's supposed to be 0. So we are going for 200 moving average. So let us click on done. We'll click on done right here. So done. So we now have, you can see we have two EMAs. One is for 50 and the other one is for 200. All right, 50 EMA and the 200 EMA. So let us see how they appear on the chart. So you can see the chart now. Now, what do I mean? So let's start with a buy scenario. As we in the example we did, we started from the buy. Okay, we started from the buy. So for a buy scenario, we said that if you can reverse back, you can go back and screenshot the rules for the buy and for the sell. So we wait for a cross of the EMAs. This is the 200, and this green is the 50. Okay, EMA. Okay, so for a buy scenario, we wait for this cross to happen. This cross has happened. The cross happened right here. Now price bought up and break above the 50. This is the 50. So the candles broke above the 50 and retested the 50. Okay, right here. So this is a retest. So we now get into the trade when we see a bullish engulfing candle right here. So we get into the trade right here. All right, we got into the trade right here. So our stop loss will be somewhere here. So our stop loss have not been taken out. So the market keep on going and keep on going and keep on going. So as the market makes new high have been broken. So we place our stop loss right here. This is trailing stop loss. So we move our stop loss from here to here. Once a new high, market makes a new high and makes a new high, we move our stop loss to this point here. Now the market creates another high, we put our stop loss right here. Okay, and so forth. Keep on moving our stop loss until here our stop loss was taken out right here. So these are our profits so far. This will be our profits. Okay, profits. So the market took us out. This stop loss was taken out right here. So this is where we're going to leave the trade, because the market took out our stop loss. So we'll keep on moving our stop loss. So we'll move our initial stop loss will be below the 200 moving average. Move our stop. Then in this case, we move our stop loss. Move our stop loss right here. Move our stop loss here. Move our stop loss just like that until here our stop loss was taken out. So let us see for a sell scenario. This was for a buy. This was for a buy scenario. All right. For a sell scenario, we can see this cross right here. The market crossed the 50 and the 200. This is the 200, and this is the 50. Okay, so you can see the cross, both crossed right here, and both crossed, and the market sold down and retested. This will be our entry. So we keep on holding the trade. The market came up here, created a new low. Our stop loss should be moved. This our stop loss should be around here. move to this point, and you can see at this point now the market would have taken out our stop loss right here. Our stop loss would have been taken out with this. Okay, did not even take it out. So we'll move our stop loss right there again until this point the market took out the stop loss right here. So this is just the strategy. This is just a strategy. It's a simple, very simple strategy for new beginners, for new beginner traders that don't want something complex. So you can actually use this for beginner traders that do not want a complex strategy. They can use this at the interim and while they are learning and developing a better strategy or learning a better strategy. All right. So, and also you can actually use this, as I said earlier, you can use this strategy for your expert advisor or what we call the trading robot. So you can actually code this so that the market trades this for you. The robot trades this for you automatically. And I have made a video on how you can actually build your own trading robot. Okay, I made a video on that. You do well to look at that video. It will really help you to develop your own trading robot, even if you have zero coding skill. All right. So till I come your way next, I want to wish you all the best. Take out time to backtest this strategy and see how it works. You need to be patient. You need to see how it works, and if you feel this is a strategy that resonates with you, you can actually backtest it for some time and learn the in and out of the strategy, and then and now know if it's something you want to start using. All right. In this channel, I've got several strategies that you can actually use. There are many more strategies that you can. If you go to the video section of the history section of this channel, you're going to see several strategies and new ones I'll be releasing subsequently. So till I come your way next time, do have a wonderful and a prosperous day. Bye. And if you also, I forgot to say, if you're yet to subscribe to the channel, please kindly do so. And if you need a one-on-one mentorship, with me, I provide Forex mentorship program, and you can contact me if you need a subsidized one-on-one mentorship. And my contact detail is in the Telegram channel that I told you about, and the Telegram channel link is in the description box of this video. So you can contact me and we can start a Forex trading training mentorship. And I believe I will take you by the hand and coach you until you become a profitable Forex trader. So till I come your way next time with another useful content, do have a wonderful and a prosperous day. Bye.